And to our first conversation now, well, I hope you've been able to buy fuel. And if you've been able to buy fuel, I hope it was at a good price, because definitely we know the black marketers are out there making a buck or two. But let's get a sense of how the commodity market is faring now. Joining us is Mr. Rewane, CEO of Financial Derivatives Company, joining me via Zoom. Great to have you on the show. Good morning, sir.
Good morning.
So it seems we can't go a year without experiencing long queues for PMS and, black market sellers, making bank, at some point every year. I guess this is another one.
Yes. Let's call it seasonal inflation and congestion. But this is just a management issue, logistics management. And to a large extent, I don't know how much of this is accidental and how much of it is coincidental and how much of it could be considered as sabotage. But definitely, the inefficiency stinks to the high levels, and we need to get to that. What is more important is to note that the consequences of having petrol queues, the reduction in productivity, the impact on distorting prices, it is so debilitating to an economy that it shouldn't be tolerated. So it is an indictment on the Nigerian government, on the Nigerian NNPC, that at a time like this, we are still facing petrol queues after deregulation of the industry, after reduction in subsidy. So the Nigerians are paying a higher price and getting lower quantity. This is a no-no in economics.
So I guess at any price, even if it's 10,000 naira per liter, we'll still experience fuel queues at some point.
No, that shouldn't be. Normally, if the price is an equilibrium price, the supply should be all right, right? Should be adequate, and the demand should actually clear, the market should clear. But what is happening here is that we have almost a sole monopoly of somebody importing PMS. The refineries are not functioning, and the ones that are functioning are producing other products. So definitely there's a breakdown in the entire process. And the thing is that the logistics is now creating a problem. So you import it, it goes to Atlas Cove, it goes to tank farms. From tank farms to people, the price distortion is there. Is there subsidy? Yes, there is subsidy, but not as much as before. But today, we are buying petrol today at 1,500 naira in the market and across the nation. So it is an indictment on the system. It's an indictment on how we run things. So we have to do it better. We just have to do it better. There's no point. You can't sugarcoat this. We have to do it better.
Yes, and I'm sure we're already seeing that impact already in with commodity prices. I'm also hearing there signs of, cash scarcity also at this time. So it seems like the suffering of Nigerians is being compounded daily at this point.
We call it hardship. Let's face it. Suffering that is consistent and over an extended period becomes hardship. Hardship leads to restiveness, and the consequences could be very devastating. So we pray, and in a short period, I think the NNPC or somebody has said that within 2 weeks we'll get back to normal. But the disruption that has caused and the effect on GDP, the effect on output, the effect on standard of living, look at the price of pepper has been up 17%, because those are perishables. Beans up 12.5%, and tomatoes are up. So the perishables, because those ones have to be transported, and because of this congestion across the country, those ones are stranded in the air, in the production belt. So for now, and that feeds into the food inflation number. But this is aberrational. But it's not just good, because this is avoidable. Let me put it as an avoidable. We are just shooting ourselves in the foot. Totally unnecessary. So what does it take? You program the shipments, you bring the quality of you assure yourself of the quality, and then you have it staggered over the period. We knew that there was Easter, there was Ramadan, there was this. So something is wrong. And between the pricing, the supply, the logistics, the ordering, and all that, and all of this tied into the fact that the refineries are not functioning. At least now we know that diesel price is down, and we know that aviation fuel is down. So we need to ramp up and get the refineries, including the Dangote refinery, to start producing some of these products. And I think that solves the short term. But there are some structural issues around the exchange rate that we need to deal with, because one thing is the price of crude, the other one is the exchange rate at which the crude is bought in, if it's being imported by independent marketers or independent merchants. So we need to look at all of this to ensure that if you are subsidizing at the exchange rate level, say so and come out clean to the people. But right now, it's not good, because May 1 is tomorrow, and it's Workers' Day, and the workers are all sweltering in front of gas stations, and the transporters, you can see the effect on domestic transport fares and intercity fares. It's not a good sign.
Yeah, it's quite interesting that tomorrow is actually Workers' Day, and I'm wondering if the workers have anything to smile about or celebrate tomorrow. But definitely, we're hoping for some kind of, announcement that would make the workers actually happy. But we're talking. You did mention the FX market, and we're seeing some distortions there. We see the NAFEM window there closing in the red, but down about 5%, 1,419 naira. So it seems we're seeing some kind of big demand for dollars.
Yes, the thing is that the demand is persistent, and it's actually growing. This is summertime, and why? Graduation in the United States for Nigerians who have sent their kids to the United States is in May. The OTC conference is in May. The summer flights, people going for medical tourism and trader tourism, are all buying dollars. So we can't run away from the fact that there is a shortage of dollars. The answer is to increase the supply. What has been done so far is sanitizing the market, but the question of supply of dollars has not been fully addressed. Do we expect it to actually appreciate so sharply? No, we can see that it's closing itself at about 1350, 1400. But the fear is that if people lose confidence in the naira as a store of value, then they begin to push it. So what is the central bank doing? The central bank is increasing supply, but the increase in supply is not enough to mop up, one, the actual demand, the speculative demand, and the demand fear. There's the fear anticipation that if I don't buy it now, then I will not get it when I want it. It takes time for a price to settle at equilibrium, and we call this the cobweb theory, where the prices overshoot themselves in the wrong direction and come back. And so that's what you're going to be seeing. We're going to be seeing the naira dancing around like a yo-yo in the next 3 to 4 weeks. In the month of May, we have an MPC meeting. We think that the central bank will be aggressively increasing the MPR again to mop up liquidity. And so as that happens, and there's an attempt to actually issue a bond issue by the Nigerian government. If that happens, and then we also reschedule some of our debt, we have the World Bank loan that is coming in. So all the things are pointing to the fact that in the medium term, the naira will settle. But in the short term, we are going to have shortages, just like you had in petrol. You have shortages in foreign exchange. You will have shortages in some commodities. But these are just signs of the times. That's how I put it right now.
Right. Signs of the times, and definitely we'll see what other intervention we'll see from the CBN, maybe this week or next week. But last week we did see intervention there with sales to the
they increased the quantity they put in the market, and that helped to bring it down, but only just. Now we are back again. So it has to be consistent, and in the end, we think that there should be an auctioning system. Let's have an auction. Even if it's $50 million, let's have an auction. Let everybody bid. Let the bank bid. And then we begin to price discovery process becomes efficient. If that happens, no matter what the price is, we know that that's what the market is buying, and no preferential allotment. And then we go on and on until we find it. And if we think the rate is too high, we put more into the auction. And other people will now auction as well. You encourage all the oil companies and everyone to auction. It becomes a very transparent and open process. And then we now monitor how the people that bought it, how they deploy it. I think I think the naira will settle.
Okay.
Settle very soon. Thank you.
All right, Mr. Rewane, we'll continue the conversation right after this short break. I still have with me Mr. Bismarck Rewane. Do stay with us. We'll continue the conversation about the FX market. That's in a moment. Do stay with us. Welcome back. Well, let's get back to the conversation. I still have with me Mr. Bismarck Rewane, CEO of Financial Derivatives Company. Thank you for staying on, sir. So another headline we got yesterday, we see the federal government's planning a $10 billion Diaspora fund, and that's supposed to help shore up the external reserves. Tell us what you think about this.
Yeah, it's a good move, but again, you see, the Diaspora fund means that at what rate of interest are you going to, what kind of yield are you going to offer this people? One, for return on investment. Two, for the safety. And three, do they believe that when come the maturity date, you'll be able to cough up the dollars to meet them? And this Nigerian diaspora money, they have what they call it, they have options. They have options to put their money in any other fund. So one, you have to be competitive on the pricing. Two, you have to appeal to the patriotism of Nigerians. People don't invest money based on patriotism. They invest money based on safety and the confidence they have in the system. So we need to build up credibility over time. But I think it's a great move. Like they said, the longer journey starts with the first step. It's a great move. If you can mobilize 10, right, maybe slightly more, 10, $12 billion, it means that one, you can refinance a lot of the hot money that has come in. Two, you can refinance your maturing obligations. And three, it gives you enough money to actually invest in projects. But again, the whole idea of raising external reserves is not to defend currencies. It is to fund, to ensure that the currency is well backed and that people can now use the resources. And investors are sure that when they want their money out, they get it. And when they want the money in, they bring it in. Once that stability and confidence is established in the markets, you find that things begin to happen. And you don't look at it in isolation of the other fundamentals. For example, the price of cocoa has lost 15%. It was as high as $12,000, it's now down to $8,000. We knew that price was not sustainable. So we don't make decisions based on speculative pricing. The average price of cocoa at the end of the year probably be about $4,000, if not $3,000. But whatever you're getting now, you're making some gains. And now the price of LNG has increased, and the price of oil is up there. Oil production has to increase. So when you put all of this together, the balance of trade begins to look better, but the payments and obligations in terms of dividends, in terms of the things we have to pay out for invisibles, is also increasing. And don't forget one thing, that we already committed forward some of the oil production into all sorts of transactions, President Bank transactions. So the oil that has been committed is not available. We've already taken that money and spent it, right? So it means that our cash flow, our dollar cash flow, is impeded by the fact that monies that we've spent, we've taken some money, spent it already on consumption, and then we need to raise more money. One, to cover the whole of what we created, and two, to invest in productive activity to increase output and GDP growth.
All right, Mr. Rewane, well, tomorrow we know it's Workers' Day, and definitely everyone is expecting some announcement about a new minimum wage. But we've heard from Labour that negotiations are not going too well, and we might not get that number tomorrow. But I don't know what you're expecting.
Let me say that I was the chairman of the minimum wage committee in 2019. Minimum wage is not something that is open to imagination. It is something that involves a lot of work, a lot of macroeconomic work and analysis. The impact of minimum wage on output, on employment, on welfare, on inflation, it is so profound. Therefore, I don't think we should be stampeded, Workers' Day or no Workers' Day, I don't think we should be stampeded into announcing a minimum wage, which is not affordable and which cannot be sustained. We heard a few states, I think Edo State and Lagos State have announced a minimum wage of 70,000. Is that a preemptive move? I'm not sure. But let me say and put it on the table that in 2019, 30,000 was the equivalent of $75. Today, $75 will give you about 90,000 naira. So even to bring people back to where they were in 2019, you're going to be paying them 90,000 naira. But can the private sector and the public sector afford 90,000 naira a month for an unproductive workforce? That's the big question we have to ask. And if you increase it, how are you going to fund it? In 2019, we increased the VAT from 5 to 7.5%, and that helped to actually moderate the inflationary impact of this. Can you, at this point in time, begin to increase taxes on the people? Because subsidy reduction is an increase in tax indirectly. So there are many variables that have to be taken into consideration. So I don't think it's something that we should stampede into forcing getting leaders to go and make announcements, precipitous announcements on May 1. May 1 is just a day that will come and go. The most important thing is we must make decisions that are based on strong economic fundamentals, based on what we can afford, and make sure that there's no increase in unemployment and the suffering of the people. I think that is the question that we have to ask.
Definitely, we're all still trying to deal with inflation at this time. Thank you so much. It was great having your perspective, Mr. Bismarck Rewane, CEO of Financial Derivatives Company. Thank you.
Thank you very much, Ladi, for having me.
All right, we'll take a break now. When we come back, head straight to the markets. Just stay with us.